FSN Radio. It's all about what's next. Go to financialsurvivalnetwork.com and sign up for your free weekly newsletter. You'll also get 3 free reports. The Financial Survival Network. It's all about what's next.
Financial Survival Network is brought to you today by Byrne Resources, a junior exploration company with the appetite of a major. It's hot on the trail of the next globally significant discovery, creating enormous potential upside for you, the shareholder. Byrne is one of the most aggressive exploration companies pursuing high-grade, scalable gold and copper deposits and has a premier 7-project portfolio, including its 2 flagships, Committee Bay in the Arctic and Sombrero in Peru. Byrne's unparalleled technical team and highly experienced management has a history of success in advancing and monetizing exploration assets. No wonder Byrne's been called one of the best in the junior exploration sector. Byrne trades on the TSX and the NYSE under AUG. To learn more, go to byrneresources.com. That's AURYN resources.com.
The Financial Survival Network. It's all about what's next.
Welcome. You are listening to the Financial Survival Network. I'm Kerry Lutz, and today is 4/17/19. Well, gold prices breaking down. We're under 1,300. We're at 1,275. Looks like they're going to go lower. Hey, recent guest, he was looking at his astrological chart, said if it breaks 1,280, could go a bit lower, maybe lose 100 points. Well, we don't know what the future is going to be. As a wise Yankee once said, prediction is very tough, especially about the future. And this is certainly the future, and this is no different. Very difficult, very complicated. Hey, if you've got an opinion where the price of gold is going to be at the end of the year, I'd like to hear it, and I will read it on the air if it's really a great post, which I'm sure it would be, or you wouldn't bother sending it. Email address kl@kerrylutz.com. Well, person who does follow gold follows it closer than I do. Better analyst than me by far, because I don't pretend to be an analyst in anything other than self-analysis. I just don't really have that training and that temperament, is our good friend Jordan Roy Byrne from thedailygold.com. Jordan, welcome back.
Hey, Kerry.
So what is gold going to do? You know, I go back to a talk that I saw you do at the Metals Investor Forum in Vancouver. It's almost, well, I guess it's 4 or 5 months ago now. And you were saying, hey, there's no indication that gold is in an upswing. It's kind of muddling along in this channel. Technically, it would be in a down trend, but it's kind of directionless almost. It's been in this channel for years already. So it looks like your prognosis, or I should say your diagnosis, was confirmed.
Yeah, well, sometimes you get it right, sometimes you don't, because like you were saying earlier, like Yogi Berra said, predictions are hard, and especially about the future. But yeah, I agree with you said with respect to gold. I mean, to me, the disappointing thing in the last couple months was that gold peaked at 1350 and it couldn't quite get up to the 1360 to 1370 level, because had it got up to that level, then there would be higher odds of a bullish correction and pullback where it would digest that move in a bullish fashion, not give up much ground, and then it could be in position to break out. However, it did make the lower high at 1350, just a slightly lower high. That bothers me a little bit. Then in the last month or two, we kind of had this bearish setup. Some people are calling it a head and shoulders. Some people are calling it a bear flag. Whatever you want to diagnose that pattern as, it was bearish. A couple of days ago, we got the breakdown below 1280. Today it's holding up okay, but still it's kind of here in the short term. It's technically broken. And on the fundamental side, because you know, Kerry, that I also like to talk about fundamentals, is if you're only looking at charts, you're limiting yourself to only one area of analysis. But on the fundamental side, my view has been that to really get this bull market going in precious metals, we need to see the Fed cut rates. There is a chance that perhaps we could see an inflationary blow off to this bull market in stocks and to the economy, but I don't see, I mean, that's a very, very low probability. That would be the other scenario where gold goes higher. So my main scenario is the Fed will cut rates, and that is when we'll see precious metals begin a bull market. And, you know, in the last couple months, the Fed funds futures market was basically pricing in one rate cut in the next 12 months. So people were getting, I mean, the market was getting, not excited, but perhaps they kind of went too far in projecting a rate cut in the next 12 months. And so now what we're seeing is a shift in those expectations where, the S&P 500 is on the cusp of a new all-time high. Global equities have recovered. China has pumped a lot of money into their economy and been stabilizing a little bit. You know, we've had lower bond yields. Housing has been a drag on our economy over the last year or so, and now that's kind of abating, and perhaps that's turning around a little bit. So it's not to say, Kerry, that things are getting so much better. It's just that we're seeing a shift and things are getting less worse, or maybe they're stabilizing a little bit. And so that makes the market realize that, you know, maybe the Fed is not going to cut rates in the next 9-12 months or so. And so that to me, that's the fundamental explanation why we've seen precious metals in the last couple weeks here roll over and start to point lower. And, we've been trading in a big range, whether you're looking at the miners or the metals. And, the risk right now is that we're going to see them, trade down to the lower end of these ranges.
Mm-hmm. Yeah, well, anything is possible. And I'm not the best at calling the future by any stretch, but it seems to me the daily gold market really is behaving differently than it has for the past several years. Certainly was as of a few weeks ago. And till we get some confirmation here, we're just not going to know. One of the things that I talked with, I can't remember who it was, Brent Johnson, is that there's so much money coming into the U.S. from overseas that really and overseas in a lot of different ways, but especially in terms of loan repayments from foreign borrowers who borrowed in dollars and are paying back in dollars, and it's really burdensome, that this is helping keep things afloat. So the international flow of funds is always something that's important, but it's very hard to get a handle on it and how it's affecting things at the present time.
Right. And yeah, I'm not an expert on that area. Brent obviously is. I know he talks about the dollar quite a bit, and I would, the dollar is something that to change gears slightly, because that obviously for flow of funds and international payments, the dollar gets impacted by those capital movements. The dollar's been trading in an interesting range, and it looks like at some point over the next couple months, it's probably going to break higher, break lower. And I don't have that great of a handle on it, but I would say that, I kind of have a contrary view on the dollar, Kerry. I really think that a higher dollar would actually be bullish for gold. It would, obviously, if the dollar broke higher, that would be a little bit, or not a little bit, it would be negative for gold initially. But if the dollar were to break higher and really strengthen, that's bad for the global economy. It's bad for the U.S. economy. It's just, and Brent has talked about this, a higher dollar, it's not good for anyone or anything. And so eventually, if we get a much, much stronger dollar, that's going to force much easier policy out of the Fed that would benefit precious metals. And so, it's kind of a perverse view, but I would, as a gold bug and a gold bull, I would rather see the dollar break higher here because, what we're seeing right now, we're seeing, obviously, the U.S. market on the cusp of all-time highs. Global markets have actually recovered. They're strengthening. And if the dollar were to break lower, the knee-jerk reaction is, oh, well, that's great for gold. But, we saw that in 2017. Remember, the dollar had this huge decline. But when the dollar declined, Kerry, the stock market outperformed gold and gold stocks. That's normally what you wouldn't expect. You'd expect dollar breaking lower. That's really bullish for precious metals. And so even though precious metals had a decent year in 2017, to me, it was not a decent year because the dollar had this huge break lower. Gold couldn't break out. gold and the gold stocks, they underperformed emerging markets. They underperformed the stock market. And to me, if we see the dollar break lower, I'm worried that we could see a repeat of that we could see, global equities, U.S. stocks, they outperform gold and gold stocks again. And, maybe if the dollar breaks lower, precious metals would hold up okay. But I'm not sure they would. I'm not sure that we would see the beginnings of a huge bull market and they would break higher. I think, as I said earlier, I think, the reverse of that, the dollar actually breaking out, I think that in the long run would be better for gold and precious metals. So it's something to keep in mind as the dollar here, trades in a tight range, and it's on the cusp of a break in either direction, as we end spring here and get into the summer.
Yeah, well, we're in for interesting times, that's for sure. Nothing ever comes out exactly the way you expect it to. That's one thing I've learned living through a number of cycles. The cycle controls, you don't. And so I guess we're just going to have to sit back, watch, and see what happens. Stocks, what's doing with mining stocks? They're breaking down a little bit? Where are they at?
Yeah, they're breaking down a little bit. In the very short term, I think they're starting to get a little oversold here, so we could see a bounce. But looking at GDX and GDXJ, if you look at a weekly chart or a weekly candle chart, and you just go back, you can put a 3-year or 5-year chart. It's clear to me that the key level on a weekly basis is 23 for GDX and 34 for GDXJ. And if you look at, again, the last 3 or 5 years, you can see that over the last 12 or 14 months or so, GDX and GDXJ have tested those levels, again, 23 and 34. They've tested those levels a handful of times. And eventually, when we see the market exceed those levels, that's going to give us confirmation of a new bull move. However, in the big picture, we did get this move from 17 to almost 24 in GDX, and then 26 up to nearly 35 in GDXJ. But as you said, we're starting to, break down a little bit here. We're starting to point lower. And, what I'm kind of thinking, and this is just one scenario because you have to keep these things in mind, it's possible that we could see the miners retrace most or even all of this move, but then make a really huge double bottom around those lows and turn around. And so, that would be really, really encouraging for the long run. But obviously over the next, 3, 4, 5 months or so, that implies lower prices, which is not good. But again, in the bigger picture, this decline that we're seeing, if it extends, I think it, whenever it ends, I think that could be, potentially the start of a real bull move higher, provided that after that bottom, the Fed is going to cut rates, within the next, 3 or 6 months or so. So that's what I'm looking for in mining stocks. The near term, medium term trend here doesn't look good, but it's possible that, this decline that we're seeing, that whenever it ends in the big picture, that could be the point when, the next move higher, the rebound, that could be the start of, what we've all been expecting and, hoping for in the last couple of years.
Yeah, could well be the case. No doubt at some point this is going to happen. We just don't know when. That's the unfortunate thing. But how would you rate the risk of holding metals and stocks at this point? How high is that?
You mean like metals and mining stocks?
Yeah, exactly.
Well, I think the risk, looking at GDX, that it's trading below 22 now in the 21s. And, that has, I would say, potential risk down to 18 or the mid to high 17s. GDXJ is trading at about 30 right now. That has downside risk to 26. So, we could see another 10, 12, 15% decline perhaps. And looking at the metals, probably it's really hard to say. Gold, this breakdown that gold had projects down to around 1220. There's a 200-day moving average at about 1253. It's probably going to test that at some point. Ultimately, I would say there is a potential that it could go down to the low 1200s. And silver, I would really watch silver as a leading indicator because silver has led this move on the downside.
Mm-hmm.
And, it's probably going to retest that low in the high 13s. Maybe it will go a little bit lower. I'm not sure. I just see downside risk for the sector over the next several months. And, is it going to be a lot? Is it going to be more than I think? Is it going to be less than I think? Those things are all possible. Like it's just, it's hard to project that because we're just guessing. But what we can say is that the trend has turned lower. Keep these strong support targets in mind. And in addition to that, focus on the Fed policy and how the market's reacting to that, because my strong view is when we do see the rate cut, that will be when everything, starts moving higher and we get breakouts and all of that.
Yeah. So do you buy on weakness? What's your take on it?
Well, look, everybody's different. Everyone has different goals and all of that. I would, for metals, what I would say is, I would start accumulating metals, just dollar cost averaging when it looks like the Fed is going to start cutting rates. Mm-hmm. And with respect to the miners, I would, for GDX and GDXJ, I would say I would wait to buy until GDX at 17 or 18 and GDXJ down to 26. I think those are, what you want to do in the market is trending lower. You want to try and buy support in when the market gets oversold. And of course, I have various indicators that I look for. We're seeing the market right now on a short-term basis is getting fairly oversold, but we want to see it get more oversold on a medium or intermediate term basis before we make a buy and assume that that's something we can hold for a while and not have to flip out of immediately.
Yeah, so you want to trade from strength, not from weakness. That's always the way it should be. And you got to be circumspect because you just don't know what is going to happen here with the market. Of course, none of us know that, right? I mean, really. So caution is the byword. Be prepared for a decline. But at some point, things have to turn around, I guess, from a worldwide fundamental viewpoint, because we're kind of in a mess here. Debt keeps increasing at geometric rates with no end in sight, and just a lot of instability in the world financial system here.
Yes, absolutely. And also, I'll just say it again, we're in a late economic cycle here in the U.S. So, who knows? We can't predict, is this going to last another 6 months, 2 years, 1 year, 9 months, 1.5 years? We really can't predict it, but we can just say that we're late in the economic cycle. Growth has already slowed considerably. Mm-hmm. And that's immediately after, we got deregulation, which is good policy from this administration. It's after we got a huge tax cut. I mean, that just had like a 6 months positive impact. Now it's gone basically. So, the economy it's in a late cycle. Growth is slowing. At some point in the not too distant future, we're probably gonna get a recession. Stock market's going to roll over. Then the Fed is going to cut rates aggressively. That's when you get precious metals screaming higher. Doesn't quite look like it's going to happen this year, but I could be wrong. Maybe it's the end of this year. Maybe it's sometime next year. Conservatively speaking, I think we're going to see it sometime next year. But look, that's just a guess.
Yep, it's just a guess. That's all we can do. Hopefully a more educated guess, a more knowledgeable guess than others. But in the end, the future is either going to vindicate you or indict you, one or the other. So let's hope it indicts you and you're wrong and it goes way up, because there are factors out there that none of us can possibly know. The future is always uncertain, and hey, we just don't know what's going to happen, and we're going to leave it at that. So find your work at thedailygold.com. Just tell us about the site quickly.
Well, go to thedailygold.com. I do have a premium service, but more importantly, I have a lot of free information available there. You can opt into my email list, and I'm updating my book, which should be done in the next couple of weeks. So you can get on my list. You'll get a copy of my free book coming out very soon.
Wonderful. All right. What's the name of that book again?
The name of the book, Gary, is The Coming Renewal of Gold's Secular Bull Market, Why Precious Metals Investments Will Outperform in the 2020s.
Okay, well, that's a mouthful, and hopefully it's going to come true as well. I tend to agree with you. Anyway, as always, if something struck you in the show, email us kl@kerrylutz.com, Twitter feed @KerryLutz, Facebook page Financial Survival Network. Hey, wherever you're listening to the show, YouTube, podcast, aggregators, podcatchers, whatever it might be, please subscribe, like, and share. It really helps me a lot when you do that. Helps get information, ideas like you just heard from Jordan out to the maximum number of people. And that's what we really need to do. Jordan, always a pleasure. Thanks so much for coming on.
Hey, Kerry. It's always a pleasure to be on your show. I look forward to coming back again soon.
FSN Radio. It's all about what's next. Go to financialsurvivalnetwork.com and sign up for your free weekly newsletter. You'll also get 3 free reports. The Financial Survival Network. It's all about what's next.